Even if it gets a little bit slow, we're going to nudge it along. I think they're going to do that. I really think so. Am I crazy?
No, you're not crazy at all. That's what, well, the Fed is hinting, not that they won't raise rates for eternity, but at least in the short run, that they will be accommodative. Fed Chair Powell this week saying that he will listen to the markets and the impact of the trade tariffs on the economy, and saying that he will do everything he can to sustain the recovery. But I can't even believe we're talking about the Fed again. I mean, we haven't talked about the Fed for many months, but look, the markets love it. If you're an investor and if you're long, which I know you are, then this is a good day for you. I just can't believe that last week investors were so scared. I mean, you heard across, except for on your show, on all channels saying that the market's going to go into a recession, the economy is going to go into a recession, and global growth is slowing. But here we are on the backs of a very scary Monday where President Trump threatening to put 5% tariffs on over $350 billion worth of Mexican goods on Monday. And you know what? Everything's okay. The market has come back. I don't know that that'll be sustained, but the Fed is the market's best friend right now.
Heather, the purists are upset. They're up in arms. They've got pitchforks out. They don't want the Fed to be involved in this at all, but the Fed obviously is, and they're saying it's dangerous for a variety of reasons. What do you think the dangers would be, though, if the Fed were to sort of change, be more accommodative, print more money? What kind of risk would that be? It'd be great times for Wall Street, but it's somewhere...
Good for the markets, but look, that's massive hyperinflation. If they were to keep printing money, which I don't think that's what Fed Chair Powell's hinting at. I think he's hinting at a rate cut this year, which is what markets are expecting. So you're not going to get the massive hyperinflation when they're buying assets left and right, which they did after the recession in 2008. But since December 2008, we haven't seen a rate cut yet until perhaps this year. But I think the biggest danger is that if we had a true recession, past Fed Chair Janet Yellen saying that on average, the Fed has to cut rates about 5% in order to help get the economy out of a recession. So that's the problem, is that there would be no room to cut rates if we had a true recession.